You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, that rockin' tune means it's time, once again, for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call around these parts the old Options Insider Radio Network. Many different flavors of options and derivatives-oriented content on said network. You want a little bit of basic education? Well, we got that in the form of Options Bootcamp. You like unusual activity? Well, of course, there's this program as well as Andrew's little program there. Options Oddities records it every day live, noon Central, 1 p.m. Eastern over there on the TD platform. If you're thinking about checking that program out, want to join us live, we'd love to see you. Of course, if you're in the financial advisor market or you perhaps are a financial advisor and asset manager, you can, of course, check out the Advisor's Option. If you're deep into all things volatility, well, we have volatility views for you. If you're onto the futures option side of the fence, got a few programs for those of you guys interested in that, and more coming. Don't worry. I know the Futures Options Roundtable on a bit of a hiatus, but we'll get something back for you very soon on the old network. A lot of you guys really interested in the commodities and commodity options these days. We'll make sure we have more stuff for you guys going that way. Pretty much any way you can carve up the derivatives pie, we've got something for you. 13 programs on said network. Where can you find all of that options and derivatives goodness? Well, lots of places, including the mothership, the flagship, theoptionsinsider.com. Surf on over there. Check out the breaking news from the options market. Check out a little bit of the UA we have sprinkled throughout the old website. A lot of those alerts, more than we can get to on this program. Of course, a lot of education, analysis, all sorts of fun stuff over there, as well as that Insider Radio Network tab. Click that tab, and you're pretty much off to the races. All 13 of our programs are open and available to you. You can stream and download till your heart's content. And of course, if you have questions or comments, let us know. We'd love to hear from you. And you can also find us in all the usual suspects, all the usual places, iTunes, Stitcher, Aha Mobile. Make a note on iTunes, by the way. Some people have written in. There seems to be a little bit of a problem with some of the iTunes podcast systems. Some of the shows, for whatever reason, not just ours, across the iTunes board, seem to be having some delays in downloads and others. So if you're having issues for whatever reason, experiencing issues maybe with the option block feed for whatever reason, some of you reported that, then you can always get the show in, of course, our main network feed as well. That one seems to be issue-free for the time being. Again, it's an iTunes issue. It's nothing on us. We're just waiting for them to kind of sort it out. So if you're having some delays, check out the main feed. And of course, you can also get it Stitcher, Aha Mobile, pretty much anywhere else you like to find our program. We can pretty much make it available for you, of course, as well as our mobile app available for iOS, Android, and the Fire OS. So again, no shortage of ways for you guys to check out all of this great content we're putting out there for you, as well as to let us know your questions, your comments, your insights. And joining me for this rocking episode of the old Option Block, it's a truncated but a power panel today because Uncle Mike is on assignment, aka basking by a pool down in Florida. So the co-hosting duties, I should say, fall to my partner in crime, the Rock Lobster himself, Mr. Andrew Giovinazzi, from our network, as well as from a little place we call the Old Pit. Mr. Rock Lobster, welcome back to the old program. How are things in scenic and sunny Maine?
It's finally scenic and sunny again. It's nice. It's good.
You're finally getting that St. Charles weather up there.
I know it's. It's in the high 60s. There's still some snow on the ground, and the The guys that do the clam boat dredgers are still not quite out yet because there is still a sheet of ice on a lot of the inland waterways.
I will say I saw the high-speed boat that goes down the river here in Chicago out in the lake called the Sea Dog. It's like an open kind of open boat that goes high speed down the river and things, and there's no top to it. So you know when that boat is out and hitting the water, that not even spring, that summer is here in Chicago. People are riding the Sea Dog again. So there you go. You know the seasons have finally turned. Spring is a very fleeting time here in Chicago. It's winter, then it's straight into the heart of summer. So apparently when the Sea Doggy arrives, the summer has arrived with it. Speaking of things arriving, it's time for that most important segment, the trading block, to arrive.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, you know what that music means by now. It's, of course, time for the Trading Block, the portion of the show where we break down what was moving, what was catching, what was lighting up the old tape today, what was catching our eye. I should mention, a lot of you like to know the date. We are recording this, of course, on Monday, April 13th. You're hearing this on Tuesday, April 14th, or whenever you guys like to tune in. A lot of you guys like to tune in far down the road, months, if not years down the road. We welcome all of you. All of you are welcome to this here option block. And it was a bit of a, I wouldn't say quiet, but moving to the downside day, not as robust as we've seen in some of our sell-offs in recent past, certainly not over 1%. Most of the major indices hovering down less than half a percentage point. The S&P down about 0.4 of a percentage point. Same for the Dow. The Qs, a little bit of a laggard, only down about 0.3 of a percentage point. And VIX cash slowly resurging back to the upside. We were talking about it perhaps, slowly trickling down to that 12 handle last week. And it did briefly. Got into that 12 handle range. Now, of course, you have the weekend coming back in, and as well as the sell-off combining to push us up about 1.6 handles in the VIX cash itself. Futures moving up accordingly as well. Interesting stuff in that neck of the woods. So perhaps we'll start there. Mr. Rock Lobster, what caught your eye in today's VIX upside explosion as well as the rest of the market activity, sir?
Well, as far as like volatility, I thought the Friday drop was pretty huge for volatility. For VIX getting to the 12 handle, I mean, we've been kind of hovering around 16 forever, it feels like. And all of a sudden we're trading in the 12 handle. I was surprised. We had some interesting trades on in Option Pit, and we closed some of them this morning actually when vol was down even farther and they were crushing the VIX futures. And this morning we lightened up some of the short vol positions anyway. So the big thing is, and then all of a sudden, we've got a whole lot more of a move in VIX cash than we thought. I mean, the market was down. You had stocks were down, 0.5%, not even 0.4%. And VIX came charging out of the gate just to make Markle mad, but up 10%, up
yes,
a full
rub it in while he's not
34.
here. Do it. Say it. I can tell his ears are burning right now.
I know he's going to kill me anyway, but it was a pretty big move. So I think it's one of those things where, as far as trading that at the money volatility, traders are content to let it drop if there's not really any action. But as soon as there's a whiff, they pump it right back up again. So I was not totally surprised. We got to the 14 handle. I thought the low for last week would have been 13. We busted through it a little bit, but like our blogs had pointed out. But overall, the 14 volatility, you've got this, the Chinese stock market at, I think, multi-year highs right now, at least since the financial crisis, I believe. So, and with the ban lifted over there, you walk in, it's up another 1.5 or 2% every day. So there is that. So you have, I don't know, I feel like there are multiple kind of swirling things. You have the Chinese thing happening. You've got zero interest rates in Europe. And just a couple of years ago, you couldn't pay anybody to take a Spanish debt off your hands. It's funny, like you think about John Corzine. How right was that trade? He just ran out of money
He ran out of time a little bit. So he had money.
Time and money. But
two important factors in a trade.
Yes, geez Louise, but they would have done really well.
They just had a few more customers to steal from. They would have been all set.
Exactly. I'll just would have been quiet. But I think it's enough to keep the market swirling around a little bit. But ultimately, you still have a low interest rate environment. The ECB's helping, and now now the Chinese might ease a little more, lower rates a little more because 7% growth a year isn't good enough. That still gives me all that stuff gives me the willies. I think they should all just throttle back on the whole stimulus thing. I'm not quite, the equity market loves it. I don't know how good it is for us in the long term. And it just sort of, it's sort of like, it's kind of, I feel like they're going back to the well, like one too many times with this. And at some point there will be, the nerves will start to kick in pretty hard.
Speaking of things kicking in, we saw some interesting things kicking in towards the end of last week. We were talking about volatility and VIX options. In fact, as we were recording last week, Andrew, the Volatility Views program, we were kind of talking about how there wasn't much going on in the VIX options realm for the past week, except for Friday, where we saw some crazy prints start. It was kind of a bit of a weird day. I'm sure you caught this as you were looking at your various positions as well throughout the day. Started off with someone gobbling up 90,000 of those April 13 puts, I believe, for 11 cents. In fact, as we're talking today, it looks like someone might be indeed coming back in to get some of those. Let's see if I can pull up the numbers there. And also, but that wasn't enough. It almost seemed like a misprint at first. Because as Mark and I were recording the show, I saw this big, enormous VIX. Like it looked like it might have been a 1x2, but it seemed like it was a third leg stuck in the middle there. It was kind of a VIX vertical, I believe, if I remember correctly. I think it was 1724, somewhere around those handles, like 170 by 380,000. It was a ridiculous size trade, so much so that I had to double check to make sure all those prints were correct. And then there was a big 80,000 block going up somewhere in the middle. Probably someone who facilitated the trade, perhaps putting it up mid-market just to hedge their own exposure because it looked like they were short that 1x2 pretty aggressively. But still, some size paper coming out of nowhere. Weird stuff kicking off, starting with that very, very near-term VIX put print there, Andrew, and then kind of kicking off into some weird, crazy, looks like 1x2 out there in VIX land. So paper leaning both sides of the fence very quickly there.
Yeah, I thought that in that VIX, that big, it's almost like it was almost like a Christmas tree type trade, but they took on a massive credit.
Yes.
It always makes me a little leery when you see that stuff go up at the bottom for vol. That's always like you're trying to grind that last point out of the VIX cash, and you have a huge future premium, and it's always so tempting. I think there's like good arb trades you can do. And I wonder if they had something against that somehow. But they still have a lot of juice. Now,
I would hope. You think that's just coming up naked, just that one trade? They probably have something OTC lurking against that, I would think.
But man, it was a fairly big piece of sold juice.
Yeah, that's probably the biggest thing I've ever seen go up in VIX by itself. That's just insanity.
That's what I thought. But but there it goes, and it went up, and somebody is now short some vol, and all of a sudden, of course, you have the spike today in volatility. So sometimes you look at those things and you're like, God, how can somebody's timing be that bad? But it looked good for about 30 minutes this morning when all the vol products pretty much hit new lows for 2015 this morning, and then they all turned around and started marching up. But again, they started, and at the same time, they're starting to give it all back again. So without any kind of real sustained movement, you get a little pop in volatility, but that just doesn't last very long. And I think right now that's what we're going to see. At 14% vol on the VIX, we need to see some movement every day. And I guess this is the first down day we've had in a couple days or something like that. And that was enough. But it wouldn't surprise me if somebody had, let's say an offsetting position in SPY puts versus that short VXX premium. That would not surprise me too much. But boy, I was short a lot of. That's a huge position.
Look in here. It's like someone was buying more of those April 13 puts today. Another Another about 40,000 have gone up. I thought initially they're at a nickel now because, of course, we've been rallying all day. But in terms of volatility, selling off in the underlying and the broad markets. But it looks like I thought maybe someone was perhaps trying to take some of their money off the table. But it looks like they might be buying a lot more of those. There are many, many thousands going up for 24 cents, 25 cents on the offer or close to it. So someone buying more, perhaps, of those April 13th. Can't get enough of that near-term, very, very near-term VIX downside. A couple of days' worth of VIX downside. And now they're at a nickel. So they may be perhaps regretting those earlier purchases. But still.
I think they're trying to game the settlement a little bit, too. Because, I mean, we were just, I mean, they were looking really good this morning. They were trading about 25 cents. And VIX, everything looked awful. And then all of a sudden, everything, we had the turnaround. So it wouldn't surprise me. I mean, anything within a point of the close is fair game with VIX settlement. So, you get a pullback tomorrow, you get down to 13.25. You could see a 12.5 opening for VIX on Wednesday morning. So there's a shot there, but it does not look as bright as it doesn't look as bright and cheery as it did on Friday.
No, it does not look bright and cheery. Speaking of things not looking bright and cheery in VIX land, friends over there at Cranes had an interesting article this week about something we've been talking about on vol views a lot lately, of course. A lot of vol views references today in the show for whatever reason. About how, except for Friday, where they did over 1 million contract print against, one of the first days we've had anything, the first weeks really, have anything really to talk about of substance out there from a VIX options overall volume. Usually, towards last year and some of the high points, we were seeing ADV of 700,000 and even higher, pushing close to 1 million contracts. And these days, I think the ADV out there is somewhere around 300,000 contracts, maybe around the 400,000. Let me pull up the exact ADV as it stands right now. It's a little bit skewed from Friday's numbers, obviously, but 420,000 contracts. And so they were writing it up that essentially seeing, a 15% drop in the first quarter in terms of VIX options volume, and particularly February and March, a 50% drop in VIX options compared to the year earlier. Of course, a year earlier, we were getting into that Ukrainian crisis. There was a little bit more reason to perhaps be slinging some vol in those periods than there was over the past few months. But still, interesting stuff at foot over there. Speaking of interesting stuff, we're going to get to the odd block in a minute, Andrew, but I'm sure, we've chatted about this kind of stuff before. These well-timed speculators and traders, that's pretty much what the odd block is all about here on the program. We saw some savvy ones again last week, of course, our friends out there in GE, of course, making some headlines of late, rallying hard on Friday, kind of coming off a little bit today. Let's see, it gapped up to about as high as nearly 28.70 on Friday, off about a buck or so today, 27.60 trading today. So off a little bit off those highs, but still an aggressive move. It was trading in the 25 range not that long before. That's up about 10% on Friday. And we saw some people piling in to the very savvy April 26th strike for about 33 cents. We saw about 18,000 of those going up on Thursday for prices around 33 cents. Let's just see now where those April, most of you probably at home can do the math, listeners, but it's not very hard at this point in April. But yeah, April 26s are trading for $1.64 at $1.70. Let's see how many are open. Still about 80,000 open on that strike. So perhaps our friends not really being blocked, or perhaps not being savvy enough to take it off. Either way, not bad for a few hours work. Would you say, Mr. Rock Lobster? Not
at all. I think that's where everybody loves options. And of course, some newsletter writer will be pointing out that you could make, 2,000% return on or whatever, if you're just smart enough to listen to me and follow this volume. It was funny because I was going back for unusual activity. We covered call buying in GE in late February, all through the end of the month. Maybe somebody had heard something in the wind. But a trade that we looked at, Mark, and we were kind of, I think it was on the site, and we might have done a little head scratching. At the time, somebody was buying the Jan 2017 30-35 call spreads for 52 cents. And 99,000 of them. And at the time,
yes, it's ringing a bell now. Yes.
that's who is buying that call spread, right? So we're thinking to ourselves, and how we are about just buying ridiculous out of the money premium at the time. There's no chance that they're going to make any money on this thing. And yet, lo and behold, they've doubled their money.
That's what we call the somewhat uncertain insider, because he thinks something's going to cook and something's going to happen, but doesn't know between now and Jan of 2017. So he's just going to put it on. He's just going to give himself a little bit of cushion. Not like our friend who's picking up on the Aprils. He's like, no. It might be sometime in the next 2 years. I don't know. So I'm just going to put it on now. 99,999 times he did that, listeners. You can find that on the Options Insider from February 27th. Just search for giant call spread goes up in GE. I think there's a typo there. It should be goes. We should fix that. But goes up in GE. Yeah. 99,999. The Jan 2017 35 call spreads. At the time, we were kind of joking. This is a huge upside bet that GE will rally over the coming 2 years. Well, he only had to wait about 2 months, not even for that one.
And if you know something, it's a lot smarter to buy the 2 year out thing, thinking, well, I'm just, I just think we're going higher over the next 2 years. I mean, what are they going to say?
Yeah, you have more of a leg to stand on in that argument when FINRA comes knocking and the broker comes knocking than you do the guy buying the April 26s. So let that be a lesson to all of our insider speculators out there listening to the show. maybe don't make it quite as obvious as gobbling up the let's price that up now and see how that Jan is
91 cents.
It's 91 cents right now. Yeah, not
bad. And also the stock is down 88 cents. So I mean, it was easily worth $1.
Yeah, that's true.
It's a 20 delta spread, so it was worth $1. You could probably close it for $1.05 this morning with no trouble at all.
Yeah, let's see if our friend put anything on there. I don't think he did. Yeah, he's still. Well, the Jan 30s went up today about 13,000 times. So perhaps our friend deciding discretion is the better part of value on at least some of it, and saying I'll take off the some of the of those 30s, leaving himself a bit of a weird ratio if that's the case. Oh, it looks like 14,000 by about 1,100 went up.
Right.
So he took it off on a 14 by 1 ratio.
I think it's I guess one of the most important things I know. I'm going to talk about like in the strategy block on the subject, but like buying options, and there's a lot of beaten down names, and you get a lot of bang for your buck with those long term leaps. Using the leverage if you want to be long. So we'll hit that on the strategy block, but this just goes to show you give something enough time, and the ball's low enough. Things can happen.
Yeah. Things can happen indeed. Speaking of things happening, since we're hitting on some UA anyway, I think it's time to roll right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is, like the name implies, the portion of the show we get into all that funky paper like we were just talking about with all that GE upside, near term, and a little bit longer term, and we profile all that weird, wacky stuff. And if you like what we're talking about here, again, surf on over to the mothership, the flagship, theoptionsinsider.com, as well as check out Andrew's show, Options Oddities. He does a whole half hour every day on this exact subject. So if you like it, we got a lot more available for you, of course, on the website, as well as on all of our podcast feeds. Just search for Options Oddities out there, and you'll find that one as well. Going to kick things off today with a name that we haven't talked about in a while, but I know this is one of Sebastian's retail restaurant kind of oriented favorites. This is Dunkin Brands Group. It's no Darden restaurants, but it's still, I think, up there for him. Ticker symbol, of course, Dunkin, DNKN. Closing today, pretty much unched about 49.39 or so. This is the name that does, on a given day, about 2,400 contracts. So today was fairly aggressive for this name, about 15,400 going up today. The lion's share of that, 11,573, coming in some pretty aggressive upside buys here. In particular, we started profiling these this morning on the website, starting off with the big block of 4,067 of the May 52 half calls going up for 50 cents paper buy-in. As the day continued, like I said, a lot more piling in to the tune of over 7,000 more to the total, like I said, of 11,573. Most of those in different prices. They went out 60 to 65 cents, so the vol getting bid up a little bit on that strike. So somewhere in that 50 to 60, 65 cent range is where most of those went up. And again, 6,200 contracts open, so this is one of the more substantial open interest strikes out there, but still clearly opening paper because there's about 2x going up today. So perhaps we have a friend here adding in to an existing long upside position. These are fairly near term in terms of time and in terms of strike, only about 3 handles or so out of the money at this point. Also note that they went up tied to stock. With that first block, we saw about 68,000 shares going up as the other size went up. They probably went up with stock as well. We don't have the exact numbers on that. So they went up on a bit of a delta there, but not a pure 1-to-1 delta there. So looking for a nice upside pop. We got some stock in his back pocket as well. So Mr. Rock Lobster, let's start things there. Let's kick it off. Time to make the donuts. Time to dive into some interesting upside call activity in Dunkin's Brands.
When I first looked at this earlier, I thought that I was looking at kind of a buy right close or something like that.
Yeah, the first kind probably seemed that way because it was about right in the open interest size.
Yeah, and then all of a sudden, the open interest hugely swelled. And I saw a lot of other paper. I think in AT&T, there was all kinds of spots today where it looked like, there was some call closing. Every once in a while the market gets really toppy, and call riders that have been burned for the last couple of years, it's like it's close enough. I'm going to take my money and close my calls and roll up or something, which I don't blame them. And I thought that's what's happening here. But, then, vol picks up. Vol's up 4 points all of a sudden. The volume essentially doubled or tripled. Like, whoa, wait a minute. So, and the calls went out bid, 60-cent bid. On the stock's only up 13 cents today. So somebody wants them. And that kind of paper, there is some stock against them. So they're looking for a move. But, definitely looking for the big move into earnings. And I'm just, doing a little earnings profile of Dunkin', and it can move on earnings. It's moved as much as $3. The general earnings move could be as much as $3. So, there's a shot here, right? So, but if you sell stock and you buy the 52s and you get a $3 move, you're going to need some follow through.
Yeah, you're going to need more than $3 to make that pay off.
Right. So, we'll see. It definitely can happen, but they came after that strike pretty hard. No question about it.
That was the weird thing about it. That's probably what I noted the most was, how often do we profile upside call buys all the time here? How often do we profile them with the stock unched, them going out bid up? Very rarely. You can count those on one hand. Usually the guys load up on the calls, the stock is unched or maybe up a little bit, and the things are a dime or 15 cents in their face. Because that's how upside calls work, pretty much. But in this case, obviously a lot of volume coming in after the fact, keeping that bid up and bidding it up so much. The stock is negligible. It's unched. You only going to get a couple of cents for the calls for that. So
it's perched at a 52-week high. So I could see that the chart guys and everything else, like Dunkin's is poised for a breakout. It's starting to drink its own coffee and eat its own donuts. And that's going to totally pick up. But it could. It's actually since the IPO, this has been a pretty steady. It's been kind of a steady performer, actually. Not Rockstar-esque, but it's making its move. It's basically getting back to where it started the year. 1 year ago. So we'll see. We'll see if if we really do get that breakout or get the breakout before the earnings on the 23rd.
Yeah, this guy would be kind of happy either way. Nice aggressive breakout or just just craps the bed, to use a technical term. And this guy will do all right. Looks like it was trading around 41 back in December or so, in the beginning of the year. So you're right, it has a bit of downside perhaps to go as well if things don't work out. If they're not getting up and making the donuts fast enough, whatever it is that moves them out there these days. All these donut names got famously crushed back in the post-Atkins boom, and no one wanted to buy anything carb. Now it seems like they're doing all right. Maybe the coffee is carrying them. I'm not sure.
I think Dunkin's on the East Coast is pretty.
Yeah. If you grew up on the East Coast, then Dunkin' Donuts is pretty much the place for coffee. Forget Starbucks. Everyone goes there for their coffee. So if you're not an East Coaster, you may be scratching your head at that one. But definitely. My mother would stock up for days. All we had in our pantry was the only coffee she would drink was Dunkin' Donuts. She'd bring it home to make it home. So that's how popular it is back east. Listeners, and it's before we get down the rabbit hole of the Coffee Cast, a show I'm very ill-qualified to host. We shall move on to our next name here. It's another interesting one coming in Valero Energy Corporation. Another name we talk about every now and then. Has been a while since we checked back in on our friends in Valero, ticker symbol VLO. Closing today. A bit of an off day today for Valero. Closing 57.46, right around 57.5, off about 2.25, or about 3.8% on the day. So not a bullish day here for VLO. It's a name that does about 21,000 contracts a day. So one of our more robust odd block candidates, doing 5x that, doing 100,000 contracts today. So some size paper. And what caught our eye, surprise, on a day when the thing's selling off pretty aggressively, were some put spreads. In particular, let me pull up the June expiration cycle, listeners, so I could roll you through it. There we go. And it was the June 55 put spread going up, and we started profiling them this morning on the site. 13,600 times going up. Paper buying for $1.28. As the day went on, the size increased to the tune of 33,000 on the 55 puts, and a little bit less, 28,000 on the June 50 puts. All of that on negligible open interest, 4,000 and 2,500. So clearly all opening paper. And this is some interesting stuff. This is some fairly aggressive. The initial kind went up in 2 blocks at 13,600. The rest of them, I'm assuming, went up in large blocks as well. That's a lot of paper going on. And this is a fairly aggressive move. They have earnings on the 28th, so a little bit beyond. This is a beyond earnings play, but still clearly it has earnings built into it. If earnings cuts the legs off of this thing, it could certainly, this put spread will certainly do well. Looking at a chart here, this thing is coming off some recent highs, hit about 64 not too long ago, just the beginning of April, so just 2 weeks ago, and now has since just taken it on the chin, and it continues, like we said, to sell off today, down another 2.25. So our friend perhaps could be potentially speculating that this near-term pop is way overdone, and the name may be poised to retrace back down to where it was trading back in January, a few months ago, right around the 45 level. If that's the case, this put spread will look pretty good. Mr. Rock Lobster, what's your take on our friend slinging some size puts out here in June in Valero?
Yeah, this is like, this looks like this is a play on refiner margins. The stock was up almost 50% this year, from 44 to 64. That's $20. That's a huge move for Valero. And the thing with the refining, it's just, they're not building more refineries, so it's so margin sensitive to maybe this is starting to look at the harbinger of the end of the drop in oil prices. Generally, those cheaper oil prices were better for Valero, and then once oil fell out of bed, Valero started looking a little better here recently. So I think they're just looking for a straight. I couldn't see any stock. Obviously, they can have a stock position, but it just looked like a kind of a straight bearish bet that Valero gives up some of its. Let's just say the euphoria dies down in the name a little bit, where it just can't keep this earnings momentum going, which has been huge. I mean, the stock earns a tremendous amount of money. What is it? Almost in the last 3 cycles, it has earned a total of $5 total, a little over $5. And we've got one more to go. So, I mean, it's trading at a really low multiple. So it's a low multiple to maxed out refining earnings. That's the problem. So maybe it's the end of the cycle for the refiners. I don't know. I don't follow enough of the refining part, but it's certainly somebody's it looks like they're taking that bet that those refiner margins will start to drop at some point. But the company makes a boatload of money, pays a good dividend, and I think, but maybe got a little ahead of itself.
Yeah, sounds like a 50% rally is pretty aggressive. People have been talking about that refiner bottleneck for some time, with oil cut in half, not the last few weeks withstanding. That seemed to remove a lot of incentive to build new refineries. Maybe now this upside move we're seeing in oil may convince people to do otherwise. We'll see. Meanwhile, it's time for us to move on into our final name on the odd block. Andrew, this last name is kind of my litmus test for how long you've been in the options game, depending on how you refer to this name. When you see the ticker symbol T, what do you call it, sir?
Phone.
Yes. I knew it. You are officially old school, sir. Yes, all the old timers, when I walked on the floor of the SIBO, were all, I got to go out the telephone today, because apparently it was too hard to say AT&T.
Well, that was the only phone company.
Yes, it was. But
that was it. There was phone.
So listeners, if you run into someone who calls it telephone or even, God forbid, phone, they are seriously old school, seriously hardcore. As we move on to the activity we saw, of course, in good old AT&T. Closing today, another one pretty much unched up about a dime or so to $32.88. This is one of our more robust guests on the old odd block, does about 68,000 contracts a day. Doing not that much more today, doing about 75,000. So it wasn't net size paper that caught our eye so much as what was going on within it. In particular, it looks like one of our friendly neighborhood buy riders giving up the ghost here today to the tune of the April 33 calls, coming in, buying them back. When we started profiling these this morning, about 6,864 of the April 33 calls going up paper buying for 14 cents as the day went on. About 2x that went up to the tune of just a hair under 14,000 contracts total going up on the strike. These calls went up about 15 cents at 16. Not surprising given all this buyback activity out there. That's all on open interest of about 26,000 contracts. So our friend here could perhaps have some more to go if he is indeed closing. And we also saw some commensurate paper going up out there in May. In particular, the May 33s going up about 2,700 times. I also saw the May 34s going up for some size, about 8,000 times today. If they were indeed doing that spread, then it wasn't perhaps, if they're doing the May 34s in particular, it's about 14 cents for what they were getting on that spread if they were doing that roll. Not the best level, but still a lot of paper going up out here in good old phone today. In particular, a lot of people buying up some April and then perhaps turning around and selling some May against it, doing the old perhaps straight up or straight out, I should say, or the old up and out roll, depending on which strike you're looking at here. Either way, a lot of upside call paper in good old phone. Mr. Rock Lobster, walk us through our final victim here in the old odd block. Your old stomping grounds, I shall refer to it as AT&T.
No, this is basically vanilla time spread in phone for what, 12 cents? They're just, what's amazing is they're looking for no upside in here. I mean, that's pretty heavy open interest on the 33 strike.
Yeah, it's a little bit closer to home than we see our typical buy riders coming in. These guys are just like, they're clipping the wings pretty close.
And they just don't care. They're like, okay, it ain't going anywhere. It's not going anywhere through earnings. And I guess the competition between Verizon and AT&T have effectively, of course, that's what JP Morgan tried to fix. Like, I don't want too much competition. Nobody can make any money. And I think that's where they find themselves. I think they're in a highly competitive space, and, their margins just keep getting hurt. So, I mean, they're still going to generate lots of cash, but that you would think with all the growth in broadband traffic and Netflix and just all this stuff, on the web, that these networks would be able to find a way to generate more dollars. And they really haven't. So I think you think about it, you're going to buy AT&T and then you're going to trade the May-April roll for 14 cents.
Yeah, that's a head scratcher in and of itself. I can't imagine many scenarios. I'm like, oh yes, get me in for that. That's fantastic. That's you're talking a spread that's what, 14 cents to 12 cents out of the money, and you're getting 14 cents to do. Whoa, woohoo! Yeah, fantastic. Line me up to love my broker that much.
So again, not a whole lot on the roll. At least the way when I saw how it was priced. Maybe the timing was bad. They tried to game the pricing and they got screwed up. It didn't go up as spread, but you're closing April and then all of a sudden some customers selling May in similar size. So, but it's one of those things where they're just not looking for a whole lot anymore. So the symptom of AT&T just isn't going on. Of course, that customer could be totally wrong, but I wouldn't even bother holding on stock for, 13 cents. And basically, I guess the strategy is they're trying to double the dividend, right? So that pays around 47, 46 cents a quarter. If they could get 3 rolls out of it, that's another 42 cents. And now all of a sudden, they're yielding, 80, 85 cents a quarter, something like that, 90 cents a quarter. And all of a sudden they've got 10% return on their AT&T just collecting dividends and writing calls. It's not like it's a totally ridiculous strategy, but you still have the equity risk.
And the thing gaps up to 34.5 and the guy's spending $1 to roll his calls and it all goes out the window.
Yeah, but hey, they're the ones that are swinging the 6 or 10, 6,800 contracts. So what do I know?
Yes, we'll pay attention to this one as well, see how our friend fares. Meanwhile, we're going to keep on rolling right on into our next segment. It's Monday. That usually means it's time for Uncle Mike to put on his smoking jacket and bubble pipe and dispense some options, wit, and or wisdom, but he is on assignment. So, Mr. Rock Lobster, prepare your smoking jacket and bubble pipe, sir, because it is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, you know that sounds means it's time for some options strategery. I know, Mr. Rock Lobster, you've been chomping at the bit in the background for years now, trying to get a crack at this strategy block. You've been saying to yourself, when is Uncle Mike going to step away? When's he going to do it so I can finally get my time in the limelight? The odd block is not enough. Options oddities is not enough. I need the strategy block as well. Well, here is your opportunity, sir. The floor is yours. Have at it. What do you have in store for us today?
I got big shoes to fill, first off.
Quite literally.
Yeah, quite literally. Like, those are, NFL football player size shoes. But what I was mentioning here is, and we touched on it with the AT&T, is, buying calls. And right now we have a VIX of 14. And on early this morning, we had a VIX of 12.5. And Friday, we had a VIX that was breaking down into the 13 handle into the 12s. So my point is that volatility moves. And volatility has a big effect on option prices. So, and the longer you go in time, the more effect it has. So if you're looking to take like the classic stock replacement strategy, is right now, long-term volatility is a whole lot cheaper than it's been in a whole long time. And, if you're looking at some of these beaten down plays, like some of the oil stocks, some of the dry refiners, drillers, you want to be a long-term investor, like the 1-2 year options, just near the money, even a little out of the money, buying some call spreads out of the money. All of a sudden, the leverage you get with options and only spending a fraction of the dollars that you would to buy the equity, and you're buying yourself a couple years, that's starting to look a lot more appetizing. So, the vol in those names are a little higher, but that's why you have call spreads, and there's some things you can do to reduce your overall volatility exposure. But it sure is time to start taking a look at longer term volatility. And even if let's say you hedge with SPY, you own SPY or Russell positions or Q positions, and you want to buy some puts to kind of hedge, as that vol gets lower, you want to look for a little longer duration, because that volatility dollar is costing you a lot less. It's kind of like getting the same stuff for less money. And just what I'll say is that when you're at this level right now, you should, and if you want to buy protection, you're never going to find it cheaper or it's on the very cheap side right now. So ideal time to buy options, either for protection or trying to spec on a bounce in some of these industries that have been slapped around lately. And that's, be sensitive to volatility, and the lower the vol gets, the longer in term you want to go, because you're getting something for a lot less than you would have got it for yesterday. And that is the strategy block.
There we go. That's one to grow on, sir. I like it.
Yes. I didn't have the poetry of Tucson, though.
That's true. You'll get it in time. It comes with years of experience, sir. I think we got time. I want to make sure our listeners get some love, too. So maybe we'll time for a quick mail block before we wrap up with Around the Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, like the man said, this is the portion of the show where you guys take the reins and send in your questions or comments. No shortage of ways for you guys to do just that via the website. Use the feedback form, use the website comments, questions at theoptionsinsider.com, twitter.com/options, facebook.com/theoptionsinsider, or even stocktwits.com/ what are we on there? Options Insider. No shortage of ways for you guys to do all that, and a lot of that is also baked in to the mobile app, I believe on the iOS version. I'm not sure if the Android version has it, but let me know. I'll have to play around with it myself and let you know. Meanwhile, I've got so many questions. Let's see how many we can get to here. Got a couple minutes. Here's an easy one from Ingles. Andrew, this one is, I like options, but the commissions are killing me. Why are they so expensive? And interesting, it's kind of a common viewpoint for newcomers to the options market who are used to the kind of race to the bottom we've seen in the equity space for a long time. Stock commissions are negligible at this point. So a lot of people coming in used to buy in, hold in stocks, maybe doing a few mutual funds here or there. They're not really used to paying decent commissions anymore in terms of pricey commissions, or more substantial commissions, I should say. And then they get into options, they start realizing there's a ticket charge, there's a per contract charge, and they do 10 or 20 lots. All of a sudden it starts adding up. You're talking $15-20 or more, maybe a trade, and compared to whatever $3.95 you're paying for equities, if not less. And it seems like, wow, this stuff is demonstrably orders of magnitude more expensive. Why is that? We're not here to hold the water for any brokerage firm. Obviously, we did this show in partnership with a brokerage firm for a long time, and we're looking to add some more to the program as we speak. But that said, options are a very different beast than stocks. Stocks are very straightforward. The platform requirements necessary to really deliver a good equity experience to the retail customer demonstrably less than they are to deliver a quality options experience. Look at all the things we talked about on this show over the years. The things like OX was doing with the walk limit and others, and all these other platform improvements. And you look at TD and every other big broker always doing that. It's a huge arms race to keep the platform up to snuff and really competitive with your neighbors, because at the end of the day, that's your selling point, is how good your platform is. And on top of that, you have to have the trade desk there to answer questions. And look how many questions we get on this show. Multiply that times every week, times every day on the trade desk, and weekly expirations and crazy things like when does VIX settlement, what's going on with that. And that's a 24/7 job as well. So there are a lot more customer service and technology things involved in the options clientele than there are in the equity clientele. So by this definition, in addition to the messaging and the bandwidth, a lot more stuff going in. Look, all the strikes you're looking at Google or an Apple, how many strikes are updating continuously, and the quotes that are going through that, and the messaging, and they have to pay for all that to disseminate on their platform. Then, of course, you're working quotes out there and all these different things that aren't very liquid, and they have to maintain. That's a lot of things that go into running a robust options platform that I'm not sure people who come over from the world of equities and dip their toes in the water really understand. That said, could commissions be cheaper? Probably. I don't think we're going to get to that point anytime soon. If you heard on this show previously, the Viceroy, of course, saying things like firms are actually starting to fire customers because it's not worth it for them from a risk perspective versus how much they're making in commissions. Once rates turn around, once we start seeing actual margin income on behalf of the brokers again, then you might see more downward pressure on those commissions, because at the end of the day, commissions aren't how they make their money. It's really on the margin side of the fence. Right now, there really is no margin, so it's all commission, so they need to cling to that. But in the future, we may see some changes on that if rates start trickling up again in the near term. Mr. Rock Lobster, I kind of monopolized that, but anything you want to add to our friend here, Mr. Ingles, who is not a fan of options commissions?
Well, it's also, there's the leverage in options. One contract's 100 shares. So Then you have a 10 lot, that's 1,000 shares. So there's still the leverage consideration on them to get things done. But, are the commissions too much? But that's part of, you're getting more leverage with options. So you will end up paying, more commissions. If you trade more volume, you will have cheaper commissions. So it's just one of those things. It is what it is. But I remember it used to cost $50 each way for one lot in 1990. So
back when you were trading phone,
now is a whole lot less.
Back when you were slinging one lots in phone, right, sir?
Yeah, that was actually crude oil future options.
Yes.
You couldn't even get quotes for them.
You had to call up. It took 27 minutes. You had to walk uphill.
Gosh.
You had to walk uphill to the brokerage firm each way to make the trade. It was crazy.
It was amazing how difficult it was.
Now we are living in the golden age, listeners. So be appreciative. As we move on into our final segment, it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we break down what's to come, what's going down this week that we're interested in from an options and a general market perspective. And as you may be aware, we're kicking off earnings season yet again. Not so much lighting it up today, but tomorrow starts in a little bit more vigor. We're starting off with JP Morgan, Wells Fargo, some of the banks. Then, of course, my old stomping grounds, Intel. For me, it's not really earnings season until Intel reports again. Then you got Bank of America and the old Widowmaker itself, Netflix, on Wednesday, as well as SanDisk on Thursday. Some more financials. You got Goldman, you got Citi, you got Amex coming in on Thursday, and then Friday, good old GE, who's been lighting it up, like we said at the top of the show already over the past week. So some of their thunder may already be stolen from their earnings announcement, but still maybe some more to come on Friday as well. So if you guys are out there and you're kind of those quarterly options players, you like to come in when things get a little bit more rocking and rolling around earnings season, now is your time, sir. It has officially kicked off. Mr. Rock Lobster, anything you'd like to add, sir?
The biggest thing about earnings is if the strong dollar is going to hurt earnings for the S&P 500 as much as everybody thinks. I just got a note from one of my pro clients, and he was, biggest downward revision since 2011 for first quarter earnings. So basically all the analysts have been whittling it down, and we could be surprised all of a sudden. Maybe the strong dollar wasn't as bad, or there's actually some top line growth there. So there's been a lot of poo-pooing thrown on everything by the strong dollar hurts earnings, and then all of a sudden we could get surprised.
Yeah,
and then all of a sudden we have then we have all-time highs again.
It's kind of interesting to watch that narrative unfold. We chatted about this a little bit on Vol Views last week, kind of particularly not today because it's popped up again, but it was when VIX cash was kind of hovering and getting into that mid to low 12 handle. And at the beginning of earnings season, it seems like things were perhaps a bit too complacent. I mean, we already have these kind of dire prognostications. Granted, that's already baked into the market, but still, it seemed like there was potential for some rocking and rolling going into earnings season, yet no one was pricing that in. A little bit of that coming back in today, but this could be fleeting. Still, it does seem interesting how little reticence we're seeing for people to really blast vol away ahead of this earnings season.
Yeah, it'll be interesting to see actually how it works, and how it all sort of shakes out. I fade the general consensus type stuff normally, but I'll sit here and watch on this one. I'm ready to do a little scooping if I can, though. I wouldn't mind it.
Some scooping as well. Maybe we should add a corollary to that much maligned, much delayed straddle study we've been asking for many years on vol views, and not just looking how they all perform, but maybe if you just loaded up on a bunch of vol at the beginning of earnings season and you held it for the quarter or so, how that would look. Or at least for a month, maybe, and how that would look, cycle after cycle, to see if you should be a net buyer or seller, just en masse in that sense. Maybe that should be should we add that to Jared's workload, Andrew?
I think that's a good thing to chuck on his desk.
Yeah, I think we should. I'll call him up.
Right in the inbox.
Yes, right there. Say, hey, we want you to do this. as well. And as our phones ring, I think that's him right now calling me, listeners. Let me just, 1 second. There we go. All right, one more time. All right, and that is going to do it for the old Around the Block segment. It's also going to do it for this episode of the Option Block. I want to thank all of our listeners out there for downloading, streaming, and subscribing to the show, and for sending us such great questions. Keep them coming. But before we go, as always, let me check in with each of my cohorts here, including perhaps specifically the Rock Lobster today, to see what he has cooking that may interest you. Mr. Rock Lobster, in addition to all your fun oddities to come, what's cooking up in the land of the pit that may interest our listeners?
The biggest thing is right now on our website, if you go to events, you'll get a free webinar from Mark on the weeklies. There's actually a listener mail about the week, a listener mail question about weeklies. It's free. But we're also doing a weekly, 3-hour weekly webinar series on Saturday, the 25th. So anybody that wants to learn about weeklies, so you understand how they work, you can sign up for our webinar right there. The Saturday webinar is actually, it's probably the most popular thing we have launched. And as well, you can actually buy our Option Pit Live and get all the Saturday webinars. Usually we do about 8 or 10 a year for free. So they've been pretty popular and informative. And generally we try to, get as deep into one particular subject as we can. So it will be weeklies, and that will be on Saturday, April 25th. And that will do it for me.
I really enjoyed your webinar on premium buying strategies in the German Bund. It was just fascinating stuff, sir. I look forward to a repeat of that at your earliest convenience. Sexy, sexy material. Check it out over there. OptionPit.com, listeners, to learn more. And Uncle Mike couldn't be here, but of course, head on over to RCM. There's futures, there's advisors, and there's alternatives now if you want to check out all the myriad ventures they have going on over there. And of course, we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.